I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, colleague, friend, Mr. Nick Hodge, who's also an investor and the publisher of Daily Profit Cycle. This is the 302nd episode of our weekly therapy session that we call Investing in Bizarro World. We're going to talk markets. We're going to talk what we're investing in. We're going to talk activity picking up in the resource space, record high gold prices, the Trumpster, planes crashing, unfortunately, over the DC skies. A lot to get into, but first and foremost, as always, Mr. Nick Hodge, we missed you last week. How are you today, sir? Great to have you back.
Good to be back with you, sir. I missed episode 301 last week. You and I were traveling together a bit in Vancouver. I know you did a bit of update on that. And then I went to Florida for a publishing conference. You talk about the different hats that I wear, had multiple of them on last week, was on 8 different planes and got myself a bit of a cold, if you can't hear it in my voice. So dealing with the congestion. But other than that, I'm feeling pretty good. How are you, Gerardo?
I love it. It's similar, actually. I had a bit of a cold for a few days and allergies per usual here in the Austin area. But look, at the end of the day, above ground, healthy wife, healthy kids, healthy family. The wife still loves me. She gets prettier by the day. I do my part to try to keep up with being bearable. And no, doing well, working on the health thing, staying on top of that. I'll share a funny little anecdote here that my wife thinks is hilarious, and so do my kids by default, and I think the audience will probably appreciate it. We have this holistic doctor, right? And he recommends, because I like my Tito's with club sodas and my glasses of wine, he recommends this little liver shot that I take every morning, right? So before I eat anything or drink anything, I take this little thing, I keep it in my mouth for 30 seconds, and then I drink it, and it just kind of helps coat the liver, right? Prevent any future stuff. So anyhow, my wife thinks it's hilarious because she says that's the only 30 seconds of the day where I don't speak and I'm not making noises. So I'm sure the audience and those that have been with me or around me for quite some time can appreciate the funny in that. So no, long-winded way of saying I'm doing great, man.
She's going to start bribing your doctor for an extended release tablet, I think.
One that lasts for hours and days and weeks. I wouldn't blame her, man. I'm like, I know I can be. So listen, we missed you last week, and I did give a brief recap of the Vancouver Resource Investment Conference and the climate and the sentiment. I think you'd probably agree by and I know you were traveling, but by the week that we've had as the activity, right? Things seem to be perking up, and I want to get into that because I touched on it last week, but I want to get your take on the conference. You spoke, you were on a panel, you had a presentation. We were at several dinners that I think were great dinners, really good networking opportunities, really good opportunities to get some insights into some of the companies that we've written checks for. But what were your takes? What were your main takeaways there last couple of weeks?
I mean, the attitude was buoyant. The floor seemed crowded. I'm not sure whether they pinched us in there and the food court was bigger or not. There was some talk of that. But the first day that the VRIC opened, and I'm talking about just VRIC, the Vancouver Resource Investment Conference, the first couple of rows of the exhibit hall were shoulder to shoulder. So, whether or not that was retail investors or typical Vancouver people or industry folk like you and me, I'm not really sure, but I do know that there was a lot of people there, and there was a lot of talking. People are obviously encouraged by the commodity prices, and we can talk about those a little bit later. I know, at least for the precious metals, there's been a disconnect between the price of silver and gold and the price of the equities. And there's still a bit of a challenge when it comes to capital raising. I still watch out of the corner of my eye a couple of companies who announced raises in December that still haven't closed those raises. But at the same time, there's hope. There's hope about this new administration. I would say incoming, but they've already came.
Sorry. You know my stupid sense of humor, Nick. I apologize, folks. Y'all pay for this.
And some of that has played out. I saw you put Trump energy policy on the sheet for discussion, for example. And then there's underpinning currents that we know are bullish, right? Like we know that geopolitics and debt, et cetera, are going to be good for gold. We know that there's a structural supply deficit when it comes to uranium, and that AI is just going to be icing on the cake. So The sentiment was good, like you said, lots of good meetings. And I guess the last point I would have is, and I've been saying this for over a year now, is getting increasingly easy to separate the wheat from the chaff, right?
Mm.
I made a joke on Twitter, and other people have made this joke that, every team at every booth there is world class, and they're going to find the next porphyry, right? Economic porphyry. And we know that's just not the case. We know because we know because we've been doing this long enough. We know because it's just not reality. I remember reading a report you wrote over a decade ago about the
Sure.
percentage of greenfield and brownfield targets that end up being something of value, and it's very minuscule. So, um, just getting easier to see the teams that can actually raise money and that actually have a project's worth, sinking that money into the ground on. So, high level takeaways there. Sorry, I missed your discussion of it last week, but I think you probably say the same.
No, I couldn't agree with you more. And I think, look, for those of you that tune in to this podcast and pay for this podcast, um, to make money and to get our takes on the markets, I'll tell you this, the junior resource space is starting to heat up. It is absolutely getting easier to separate, the good from the bad and the great from the good. Because of the bifurcation between the commodity prices and some of the underlying equities, especially in the junior resource space. And, proof is in the pudding. I eat my own cooking and we put our money where our mouths are. Nick, I think everybody knows that. And the proof and the pudding in this case is I came back from that conference and have written 2 checks in the past week that I did not anticipate in writing. Those 2 companies have a combined market cap of $950,000. Refinancing, right? A post-financing, they'll add $1 million or so to the treasury, $2 million in the case of another company. But my point in writing those checks is I think I can get a 1 million share position with 1 million warrants, good for 2 or 3 years, and for minimal, for very very little money. And I think these are companies that trade at 3 cents and trade at 1.5 cents and trade at 14 cents. That will be 50 cent, dollar 50. And in one case, I'm really excited. There's a company that we're writing a check for at the 10 cent level. I think that could be a $3 to $5 company by the end of the year. Have to have some luck. The drill bit has to hit. I'll share those with you, not today, but when the time is right, because there's, some behind the scenes things going on and on financing that's going on that we definitely don't want to affect. But when the time is right, believe you me, I'll be sharing those with you all. But I say that to say this is the part in the cycle where I get the most excited. A good bulk of the money that I've made in the sector has been using that approach, being early, taking aggressive positions relative to my net worth. Everybody's, net worth is different, right? Relative to my net worth, being early, taking aggressive positions, getting the benefit and the leverage of that warrant when provided. And right now, every single one of these deals, with the exception of one because of where it was priced, is giving me a full warrant for 2 to 3 years. Meaning, if I'm half right about this company going from 10 cents to $5 by the end of the year, if I'm half right, if it just goes to 250, I have a 20-cent warrant. I have 1 million shares of that, right? I mean, plus 1 million warrants. That's 2 billion share exposure there. I'm not complaining if that stock just goes to $2 or $3. If it goes to $5 by the end of the year, great. We all throw a Bizarro World party. And look, it's a real asset with a real team that's coming in and restructuring the company. And that's where I think you are headed, separating the wheat from the chaff. This is the time in the cycle where companies are trading for pennies on the dollar, and the big capital, the old legacy capital that hasn't been in this space for years, and we saw it in Vancouver, is starting to roam the halls again. Sharks swimming around, seeing where there is blood, and the better management teams, especially on the private side right now, are putting together, are being able to pick up assets for pennies for a song, and then moving out management teams, restructuring boards of directors, and really being able to have a path forward to unlock the value of some of these assets. And I couldn't be more excited, despite the lull in the overall junior resource space, price action wise, right? So I'm per usual, I'm the optimist and I'm excited, but I love writing, checks for companies that have a market cap of 450,000, have the potential to be, 100 million plus market cap companies. And in the case of one that's worth 5 million right now that I'm writing a check for, that has the potential to be maybe $1 billion company if the goods are there. And I think the goods are there because we have some historic results. So I say all that to say this is the time to allocate risk capital and to get aggressive doing so, folks, because I think the train is leaving the station slowly. And then I think by the end of the year, it's going to happen all at once. And I think even the speculative capital that we haven't been able to attract in the space is going to start to come back in the second half of this year. Beat them to the punch, y'all.
Yeah, well, you're seeing a rolling over of the tech names, right? And this is, not something I called for, but I've told you that the stock market was going to be okay this year, and it might not be led by the tech sector. And so we've seen in the past couple of weeks the rolling over of companies like Nvidia and Microsoft, and that's healthy for those of us who dabble in the resource space, right? Because for so long those big companies were hoarding capital, hoarding the spotlight, hoarding the attention. That if money can start coming out of those, which it is, I mean, when you're a $4 trillion company, you can lose tens of billions of market cap very quickly. And um, that level of money looking for a home, going somewhere else, as we've long said, if it comes into the resource space, things can move very quickly. And I've seen things starting to perk up as well. Don't get me wrong. There's companies that are being rewarded, and again, with the commodity prices continuing to do what the commodity prices are doing, I don't think it's going to be long until the equities catch up.
Yeah, I absolutely agree. Let's talk overall indices and then we'll get into record high gold prices once again, right? We're going to be having this conversation, folks, about copper probably by the end of the year. I think we're going to be having conversations about record uranium prices likely by the end of the year, maybe into next year. Doesn't matter if it happens by the end of the year next year. Not really. What you should be doing is using the quiet time, again, to position aggressively and then be patient. Know what you own. Know which ones are your lottery tickets. Know which ones are the ones that you have pretty high conviction on, and really vet management teams right now, and let your voice be heard. Call these companies and ask them what they're doing to add value. If you can't get a straight answer, if they can't give you a catalyst in the next 6 months, clip them. Clip them, right? It's you can allocate money right now on 3-cent companies and 4-cent companies with management teams that have a clear path forward and are raising the capital to provide that leverage return on investment that you get when a company has a $450,000 market cap and is raising $1 million and is restructuring its management team. Doesn't take me to be very intelligent for a 500,000 equity raise to go and be $50 million market cap on some decent results for you to be very, very happy with the return on that investment. So let's talk overall indices. We got to talk the Trumpster again, right? Still insisting on following through on his threat to impose 25% tariffs on imports from Canada and Mexico. Put the politics aside, I think it's a great negotiating tactic. I don't think it's a very effective policy tool. And we've seen other policy that quickly was rescinded because of how hastily it was thrown out there. We've seen a flurry of activity, and we talked about it last week. You can't fault this president for, doing more in a week and threatening more in the first week and a half or two of his presidency than Biden did maybe in the last 2 years of his presidency. And so he's delivering to his base what he promised he would deliver: immigration raids, tariffs, an invitation to Canada to become our 51st state, which I still find hilarious because I think he's serious. A number of things, but the tariffs have the potential to really impact our economy and the economies of the countries that he's threatening to impose those tariffs on. I'd love to hear your thought on tariffs and whether you think they're an effective policy tool, not a negotiation tool, a policy tool.
I mean, I don't really know enough about tariffs to weigh in, and I think you won't hear a lot of people that say that. So, one of the things I'm trying to get better at as I get older is knowing what I know and knowing what I don't know, a la, Mr. Rumsfeld. So, are they an effective policy tool? I'm not sure. Have we implemented them before? Do they need to be? Might be a better question. Like if they're effective as a negotiation tool, do we have to employ them as a policy tool? I'm thinking of the great spat we had with Colombia here in the past week, where I think we had 25% tariffs or 15% tariffs for probably 15 or 25 minutes, and then they were gone, right? And the country capitulated and said, no, you can land your planes here, and we're not going to do them. So I think there's a lot of talk all over the place, not just about tariffs, but about energy policy, about health. We still have the confirmation hearings going on for RFK and Tulsi Gabbard. So
How do you think those are going, Nick? How do you think those are going?
some of these, conversations, I'm not sure even need to be had. You ask about the broader indices. What did happen this week is the S&P hit an all-time record high, above 6,000. So, the tariff conversation isn't really something I'm interested in having when the stock market and gold are both at all-time record highs. Um, at a risk of sounding blasé, who cares? I mean, they don't affect me. I mean, maybe they will down the road, but you know, I've learned to ignore politicians, and I can ignore white-haired politicians the same as I can ignore orange-haired politicians. So that's sort of what I've chosen to do so far. You asked about indices, so let me share my screen for 1 second, and let's just look here at the S&P sectors, because it's worth doing for 30 seconds. S&P at an all-time record high here over the past month. It's a good time to check in because today is nearly the end of the month, January 30th. The only sector you'll see in red is down here at the bottom, obviously. And it's, the sector that's led for the past couple of years is IT. So the sectors that done the best in the past month, at least to kick off January, are energy, and financials, and then communications third. So, to pound my own chest, I've been telling you oil was going to go back up. We've been in energy positions and foundational profits. And one of the two Trump trades I made in January, I told you in recent weeks, was one in the financial sector, and one in the defense communications sector. So financials have been going back up, now leading along with communications and energy, the S&P, which has hit all-time record highs. So I gave you a very big non-answer because I don't know much about tariffs. What are your thoughts on tariffs?
Look, I think historically it's proven that, they're going to affect the lower income and the middle income class the most, right? I mean, like per usual, right? When you look at the tax proposals, it's exactly what I thought they would be. They're going to benefit people like you and I who are, at the upper end of the income scale, and woohoo for you and me. But that doesn't do much for the bulk of the country that voted for him. So I continue to see this trend where people vote against their own interest, based on personality and tribalism as opposed to logic and math. And it's beyond me. I get the psychology behind it historically, but economically, I think a lot of people are going to get pinched by this, man. And so I don't think it's good for Canada or for Mexico. I don't think it's good for the US. I think a lot of those costs are going to be passed down to the consumer. And ultimately, you know, uh,
Yeah, so here's just a philosophical insight, right? Yeah, people vote against their own interest, but that's just human nature. I could pull the mass psychology book off the rack back there for you, but and this is not his question. Did they do any better under the last 4 years? Like, did their costs go down? I'm not sure. And so, I mean, maybe in some pockets they did, but if you look at the election results, people weren't feeling too good about their
sure.
lives and where they were. If you look at the inflation numbers, they were certainly paying more for shit,
Yeah.
all that sort of thing. So, I mean, did people who quote unquote voted in their best interest in 2020, did they come out ahead in
Yeah.
2024? I'm not so sure. The answer is yes. And so here's
The
my message.
answer is no. I mean, let's
Right,
be frank. Yeah.
right,
The
right. So
answer
here,
is not, I'm not sure. No, the answer is a resounding no. It's why they voted their
right.
asses out of there.
So hopefully we've, taught our audience enough that they think like us, but it's like, and I haven't voted for president since
Yeah.
2008, man. So like, let's learn not to trust these folks at all.
Nope.
Let's learn
Nope.
not to give credence to what they're going to say. Let's learn not to have our financial independence and financial success tied to the color of someone's tie or the whatever party they're on, because at the end of the day, none of them are there for you despite what comes out of their mouth. So whether you're the most pro-union liberal guy or whether you're the fucking, Trumpster, the guy who's making less than the average, household income in the United States isn't going to benefit either fucking way, right? So do something to pull yourself up by your bootstraps. Start buying stocks and equities and whatever else it is that's going to help you move that needle, because, thinking that some guy in the corner office is going to do it for you, from what I've seen in my 41 years, isn't where it's at, man. And I decided long ago that, again, I wasn't going to worry about these politicians. As I get older and I have higher net worth, what you say is true. I mean, I want the tax policies that benefit me, right? I want the school choice because I send my kids to private school, and so some of that stuff like rings true in my life. But
Sure.
if I were 20 years younger, I'm not sure it would help me, right? So, bit of a rant there, but again, I don't think the president really does much for individual families' bottom lines at the end of the day. Call me jaded with the American system, but that's where we're at. And that's why I'm taking a step back here and giving you this rant. It's because we continue to lend credence to these people like, oh, these guys are gonna do vaccines and all like who gives a fuck? Like fucking mind your business and raise your family.
I tell you who does the complete opposite of help provide upward mobility in this country to the majority of folks, and that's the Fed. And everybody knows how I feel about the Fed. I don't believe the Fed should exist. I believe the Fed as an institution is, along with most of the politicians, is one of the most corrupt institutions in the history of this country, put firmly in place to help asset owners like you and myself that can access credit, that have, equity in properties, that have a net worth that makes it easier to go into a bank and ask for, loans and home equity lines of credit and to borrow money to go buy more assets that then appreciate in value. And I then use that money to pay back the same money that I borrowed. And it's all, it's a rigged system, folks. And the Fed is largely to blame for that rigged system. So when we mention the Biden administration, now we mention the Trump administration, and we mention how ineffective both sides have been for a very long time at providing upward mobility, the Fed is the common denominator, right? Policy of easy money and printing money and living above our means in this country via the balance sheet is the common denominator. And that's kind of where I was taking that conversation. Look, there's some things with Mr. Trump that I completely disagree with. And there's some things that I completely agree with. His disdain for the Fed and the bullying of the Fed and his Treasury Secretary pick. I like all those things. I think Scott Bessent is going to be very pro-business. I think he's going to favor those that are asset owners. I am hopeful that this administration is able to truly rein in some of the spending, which is why I think during the Biden administration, you didn't see prices come down. You saw inflation get away. We were saying this 4 years ago on this very podcast that it was madness what the Fed was doing. Cutting rates at a time where like home prices were exploding and, groceries were rising. It was utter madness. And we knew it would end this way. So now the same people that caused that are supposed to be the same people that are able to kind of bring in some deflation. They don't want deflation. All of that's an act. The only way to get out of this debt, folks, is by inflating your way out of it or printing your way out of it. And I think we're going to see both under any Fed. I think that's, the wink, wink mandate behind the scenes from both sides of the aisle. And again, like Nick said, there should be a sense of urgency, especially if you're young, especially if, you have a little bit of capital to speculate with and maybe are just afraid to do it because you've never done it. I come from a family of Mexican immigrants that had never bought a stock or owned a home in their entire life, came to this country and they worked their ass off, were able to work their way up towards residency and citizenship and provide opportunities for us to be able to get in a position. I remember being 24 years old. I took out a loan when everybody could get a loan, right? It's like 2005, $400,000 loan to buy 4 3-bedroom units in Alaska. And I remember my dad, and rest in peace to my dad, right? He passed a couple of years ago. We had a great relationship the last 20 years of his life. But at the time, I remember him walking.
I don't know.
No, it was further than that. My dad was old school, right? He came up to me and he said, "What are you doing? You know nothing about real estate. This is going to be the end of you. You're never going to be able to pay that money back," right? And later on in life, as I got a little bit older, and just to make that story as short as possible, was successful. We refinanced it several times, withdrew money. Some of that money, we ended up helping them retire and move back to Mexico. We sold it, made a really good profit. It worked out really well, helped us buy other properties and all of that. But as I got older, I understood that was coming from the mindset of someone that had never invested. He was old school at a time where if you worked your ass off, if you work 6-7 days a week, if you work 12, 15-hour days, this country still provided upward mobility. You could still work your way into, a somewhat semi-comfortable situation with the potential to give your kids an education and give them a better platform to do something with their lives. And I'll be forever thankful to my parents for that. But I understand why it can be so scary for people to allocate capital in a stock, in real estate, in crypto, whatever it is, if you don't have the background, if you've never done it, if you have $10,000 and you lose 5,000, that's very consequential for most of America right now. I read a thing that something like 60 or 70% of people, correct me if I'm wrong, Nick, don't have $1,000 in case of an emergency. So I completely understand the weariness, but what I'm trying to communicate is that it's rigged and it's set up right now for those of us that are able to speculate with whatever amount of capital. It could be $1,000, $10,000, $1,000,000, $10,000,000. You pick your number and then where you're at in life. This is the time where 1,000 can grow to 3,000, can grow to 10,000, can grow to 100,000. And does it happen all at once? No. Is it a straight line? No. Can it be terrifying when you're down to your last $5,000 in life and now that 5,000 turned to 2,000 in 2 months? Absolutely. But it's getting harder and harder to have an option, harder and harder to have another choice. And I think that's why the meme coins and crypto resonate so well with the youth, right? Because you have that ability to go, well, I don't have a lot, but like this 1,000 might turn into 100,000 if I go buy a Trump coin, or if I go buy a, Peanut the Squirrel meme coin, or whatever that may be, or go buy a junior that's exploring and waiting for drill results that could go from a $10 million market cap to a $100 million market cap overnight. We've seen that happen many times over. It's the exception to the rule, but that's kind of what we try to do, is mitigate the risk, outline those risks for you all, and hopefully provide enough winners to offset the losers, right? So it's time to get busy, folks, what I'm trying to express.
That was very well said. So I was looking at my notes from VRIC, and I remember it just happened to be turned to this page, but I was standing with you on the floor and we were having a conversation with somebody. And it was along the lines of this, right? We were talking about AI and other things. And I said, man, get rich quick is really back. And I wrote that line down. I don't know if you remember that conversation. And
I do.
I just happened to look at my notes and that's where it is. Get rich quick is back. I mean, this is not really a new take. The younger generation has felt forced into YOLOing, right? You only live once, into these YOLO trades, because they see everything that you just said. You can't have a 9 to 5 and make $20 an hour and have all the things, raise a house, send your kids to school, et cetera, et cetera.
Yep.
You have to get into capital markets, and that's created an environment where people are all too willing to dabble in these things, some of which, not some of which, many of which aren't safe, right? Whether it's, Trump coin or fart coin, which is fun to laugh at, but that's the reason that those things are able to be a thing, on down to the penny stocks, right? Which you and I dabble in. And that's what you were saying, right? You can have some layer of confidence if you know the management team, if you do your research, there's at least an asset base relative to some of these coins. So
if you know where they live. No, I'm just kidding, folks. That is how America is feeling, though. A lot of America, and this is why Luigi is out of the news now. The news outlets were like, fuck, this guy, America actually is applauding this guy. And again, I'm not advocating, murder or violence or any of that stuff. Absolutely not. But the reason that resonated with a lot of the populace is because they've been fucked by the insurance companies so often. Everybody's got a story, right? Of either can't afford insurance, or was paid my insurance for years. A real thing actually happened, and now I'm bankrupt, when the insurance that I've been paying for was supposed to prevent that. And people are just fed up. And unfortunately, that's the game right now, folks. That's the system. It's really set up that way. And so, that's my rant on the Fed and wealth inequality, and my plea, I guess, to at the very least start getting yourself familiar, folks, with some of this language and some of the potential returns and the pitfalls and all of that stuff. And it doesn't have to be through this podcast. It can be. I encourage everybody to, go compare a number of sources, figure out what your risk tolerance is, figure out what you have that you could risk, figure out, what you would need your return to be and the timeline that you have, and then get busy doing something, man. Because like you said, if you're a young couple, male, female, male, male, female, female, whatever the dynamic is, and each of you makes $20 an hour and you work 6 days a week, and then you have a part-time after you get off that regular full-time job, it's still going to be hard to find a nice apartment in a nice part of town that you can afford, and then have some, leisure funds to go out and enjoy a nice dinner and go have a night out on the town. It's getting tougher and tougher to do that, folks.
Uh-huh.
So, the game is the game. I don't like the game. I've thankfully, knock on wood, have figured out, kind of the way it's constructed, and been lucky. And I always say better lucky than good, but, I've learned some things along the way, and I try to help those around me and try to put people in position. But at the end of the day, y'all got to do the work. So hopefully that resonates with some of you out there, and anybody that has questions about, resources or outlets or other platforms that we trust. By all means, reach out. We're not the, your money's got to be with us. And no. There's enough pie for everybody in the space. People that do it honestly, people that provide different services. It's why Chris Curl has a crypto service, right? One of the best. I don't know anything about crypto, but he can teach you everything about crypto from A to D, right? I don't do tech stocks, but Nick does, and we have a gentleman that specializes in tech stocks. Nick is a master of all trades, right? He does a little bit of everything. He goes where the puck is headed, and me, I dabble specifically in the resource stocks. So whatever you like, there's a product there and a ton of free information that we provide. And if our style isn't your cup of tea, folks, write us and send an email or leave a comment on the YouTube page, and we're happy to point you to some people that we think are trustworthy and can help you out. I had a guy reach out the other day on LinkedIn. Said, Gerardo, I need to buy some gold. Where can I buy some gold? Somebody that's reputable. I said, Van Simmons. I'll vouch for the credibility, the track record, his integrity. Zero problem saying go to Van Simmons. Tell him that you reached out to Gerardo and that you want to buy some gold. He'll make sure he gets you a fair price. He'll make sure it's delivered. He'll make sure it's insured. He'll do things the right way. So there's right ways to do things, folks. And if we can be of aid, that's what this podcast is for. It isn't for us, like, the $99 isn't making us rich, folks. Like, we just did that because we wanted to honor our paying subscribers that are actually, showing up and benefiting from the content by putting this behind a paywall. That's you all. So I hope some of that makes sense, and I hope some of that resonates with all of you.
Yes, sir.
All right, let's talk because I want to talk about how Luigi's out of the news, and remember the Vegas explosion with the Cybertruck and the fireworks and all that? That nobody's talking about that anymore. Remember the guy that tried to kill President Trump and supposedly shot him in the ear? I ain't heard shit about that. I never heard anything about that guy. I barely know what he looks like. I think I saw 2 images, right? Brilliant marketing moment. Glad that, glad he missed, and it is what it is. Again, never advocating for violence, so I'm glad that he missed. And we haven't heard anything about New Orleans, where, I mean, am I, like, what are we doing? Like, what are we doing in the media? It's the reason legacy media is dying. And I'm saying this as someone who has a brother who works for the Washington Post, right? It's like, there's a reason that even the people at the legacy media outlets, Jim Acosta just quit on TV earlier this week. You're like, fuck this. I'm out of here. I'm going to go start my own thing. I'm not working for these fucking clowns, right? But the coverage that is meaningful is nowhere to be found. Like, I want to know what motivated, a gentleman, a guy, a dick, excuse the language, folks, in New Orleans to go and run over people that are just out there celebrating life, right? Innocent people, random. I would like to know more about that. I would like to know, who and what he was affiliated with. I would like to know what his military record was because he was military. I would like to know if something like, all of this stuff has been buried, or I haven't seen it, and I'm looking. Do you feel the same way on that, Nick? Am I just missing the news? Like,
well, I mean, that's very complex. So I think we live in a 24-hour news cycle, and our attention gets pulled away very quickly. News agencies are very loath or reticent to put that information out right away because they want to fact check it. They want to make sure whatever narrative is they're trying to serve, they're serving it. And so we don't get all that information right away. And by the time maybe they're comfortable putting it out, we, as in the populace, have moved on to whatever the next thing is, right? To the next meme, to the next shooting, to the next bombing, to the next all-time high, to the next Senate hearing, whatever it is, right? And so I'm as guilty as anyone else. Like, I was interested in those stories for 2 or 3 days, But then life happens, right? Especially with kids, and we're on to the next thing, the next homework assignment or whatever. And I don't go back if it's not directly affecting me or it's not going to directly affect me. And I don't go back in and backfill those things. Um, Largely because maybe not largely, but, I think back to the other Vegas shooting, right? The Mandalay Bay one. Like, you're never gonna get a straight answer about that anyway, and so some of the stuff I just chalk up to memory holding anyway, and I just tell myself for right or wrong, "Well, you're not gonna get the truth or to the bottom of the story anyway, so just deal with what's in front of you and what's really affecting your life," right? So, what else? I mean, the mainstream media is obviously pretty terrible. I mean, I could go on about the shows and things like that. And it's why we have the rise of these alternative news sources. It's why we're able to do a podcast like this. It's why Joe Rogan's the most powerful journalist in the country. I mean, people see what happens and they look for an alternative for sure.
I couldn't agree with you more. So anyway, I wanted to touch on that. I think I think legacy media, and I've said it before on this show, I think it's dying. I think that the challenge now as a society, right, as consumers of information, is going to be really finding. It doesn't even have to be impartial, just factual, right? Just factual. I mean, we just had a horrible accident last night where a helicopter, ran into a commercial plane, and there's an explosion. Some of the people that were on that plane, their relatives haven't even been notified yet or contacted yet. And all I see on social media and on the news, and this was a little tacky and classless, by the way, is the president blaming it on DEI hires and Biden and Obama. And look, I have my issues and gripes, believe you me, with some of the Obama administration and some of the Biden administration. But in this case, what a missed opportunity to move the dialogue further, right? Like, you are the president now, like, take accountability, take control. You're the one that fired some 100, plus air traffic control people the day you got there to cut back. And I am the guy that is all about government efficiency. I like the spending being cut, but we have to do that intelligently. And that's where I'm going with this point, is I hope that whatever the policy direction is, I hope it's efficient and I hope it's surgical. I don't like the just throw whatever on the wall, see what sticks with the base, and run with that policy, right? I shouldn't expect more from our elected leaders. I hope for more, though, and I'm hoping that we don't continue to politicize everything. I get the game; they got to politicize some of the stuff, but in this case, come on, man, can we give it a minute? Like, it hasn't been 24 hours, literally, and I'm tired of hearing about DEI. It's no longer the law of the land. Like, all of that is done. Let's move forward now and let's get on with the next step. And in this case, let's find out what mistakes were made. Let's improve those, because we fly often. And I don't want my family in one of those situations because of incompetence or for any reason. But there should be some etiquette around, people losing their lives, especially, anywhere in the world, but especially when it's something, that isn't a military operation, that isn't, anything of that sort. It's just people on an airplane just trying to get home, man, trying to get to their next destination. So, anyhow, any thoughts on that?
That was a weird one. I'm not sure what time it happened, but I didn't see a news headline on it until mid morning, which I thought was weird. You normally would hear about a plane crash in the USA pretty soon, because I tend to stay on the buttons of Twitter and news agencies and that. I also, some of the framing was weird, and this is just my tinfoil hat going on, but I saw a lot about like a Black Hawk helicopter crash in the headline, but not a lot about like the jet and the 60 people who died. So I don't know, just a weird sort of day in general. Um, but as far as the government and the policy, just one last point there, because it's a lot about psychology, right? You were talking about the 4 years of the last guy, and then this guy gets in and he's in there waving his arms. I did see a funny joke about the Oval Office desk getting the most action since Clinton was in there. I thought that was pretty funny. Uh, but a lot of it is lip service, and you talk about politicizing it and throwing what's
Lip service is funny after talking about Clinton.
throwing red meat against the wall and seeing what sticks. And we sort of glossed over it, but I saw there was energy policy on our list of topics to talk about. And so I was reading about what he's actually done regarding energy,
Yep.
and what the policy is going to be. But again, it's a lot of lip service, right?
Yep.
So He declared a national energy emergency. Okay, but what does that mean except for it's
Yep.
three words that sound good, right? And so we're going to get back to producing American energy. Well, if you haven't checked, America's producing record amounts of oil and gas and has been for years.
Yep.
So I'm not sure what that means, but it sounds good, right? And maybe that's the point. Back to your thing about the tariffs, right? Like, I don't know what he's going to do with tariffs, but it sounds good. It makes other leaders capitulate. And even with the record highs in the stock market, like, Biden probably wasn't out there. He wasn't out there pounding his chest. Look at these record highs in the stock market. But Trump will do that, right? He'll
Hell
claim
yeah.
victory.
No
Look, the
doubt.
Trump's the S&P's back at a record because of me. And essentially, I'm not saying what makes a good leader, but in this day and age, he's definitely an effective communicator.
No doubt.
And if all we needed was a little psychological boost, maybe he's providing that. Like, yeah, let's drill some more. Sure, Biden, they're already fucking drilling. Like, whatever, just say it. You know what I mean? Like, I don't know. The XLE and the XOP is going back up, and we're not really producing any more energy than we were 60 days ago.
Yeah, I couldn't agree with you more. And again, because he is such an effective communicator and marketer, I hope he uses those powers for good moving forward. Right?
Right,
We have
sure.
4
As an
years.
American, sure.
Absolutely for the whole country, right? For all sides of things. We got to talk gold, man. I kind of saved this one for the end. We're gonna talk a couple of picks and a couple of picks that came out of our trip to Vancouver, but under the radar picks, by the way, which I absolutely love. But let's look. Record high gold price again, right? Here we are, $2,800 gold in the futures market, $2,793 the last I checked in the spot market. Silver surged past the $30 level again. If it breaks over 32 or 33, I think we get a quick run at 35 and 37. Technically, where do you see gold needing to break? I mean, there's no overhead resistance. All-time highs, all-time highs. You know what that means, folks? There's nothing up here. There's nothing above it, right?
Yeah, I mean, we'll just do the chart thing, but
All right.
that's exactly what you said, man. I mean, um, there it is. Here, you're right at record highs. Look at those. They line up very nicely. In fact, new all-time record high today, 27.98. The candle, the wick of the candle is touching there. Yeah, where does it go for here? 4,000, 5,000, 6,000. There's no overhead resistance, like you say. On the downside here, you're building a pretty good base at this point, certainly at 25.50, but you got real good support here in the high 25.85 is the number we were talking about last time, even all the way up to 2,600. So, gold stocks look really good. And at the same time, they're doing the damn thing no matter what the other things are doing. So,
Yep.
gold was going up through this while the dollar was going up. And then I was telling you that it was positively correlating with the dollar. But look here in the past couple of weeks, the dollar's really softened. This
Yep.
is the DXY dollar index pulling back from 110 to 108. And what did gold do? Gold still went up to an all-time high, as we talked about today. And then if you look at the yields, we'll just do the 10-year. I mean, sort of the same thing. The rates have been going up since the Fed started cutting. You got a little bit of breather here over the past 2 weeks, and yet gold was going up this whole time, and it continued going up while these rates have pulled back in the past couple of weeks. I don't know what that portends, but the market's much smarter than I am, and so it sees something. It sees continued inflation. It sees sovereign debt worries. It sees geopolitical continued instability and potential for war. I mean, gold sees something, and so when you say gold's at a record high, I always wonder, well, what does it see in that I'm not seeing? And so I mean, that's about it on the technicals there. I continue to think it's not going to do the 5,000 thing really fast. I think we might get to 3,000 this year, but I think you largely see a range 2,600 to 3,000. Barring anything crazy happening out there. But that's what the chart looks like. And again, there's uncertainty, right? So you ask about tariffs and Mexico and Canada, and that all weighs into the dollar and this basket of currencies, et cetera. And so I've been saying it's too early to tell, and I think that's maybe not a good saying. Maybe we shouldn't be saying it's too early to tell. What we need to be saying now is we just need to take it as it comes. And I'll take copper breaking out and record high gold prices, right?
Yep. I'm with you. I'm with you. Still bullish on uranium. We'll get the commodities overview real quick. Bullish on gold, bullish on silver. Of course, I'm still bullish on uranium. Thoughts on that, Nick?
So it's not going to be as short of an answer. Yes, more bullish on uranium now than I was 3 months ago. We had a really good pullback. I was telling you a couple of weeks ago, recommended a new uranium stock, one of the mid tiers in Hodge Family Office. So was content to buy a couple of weeks ago. That was the right call. We're up on that. We had a bit of a mini pullback, right? We haven't mentioned DeepSeek yet. I feel like it has to get a mention on this podcast. It's been on the news for the past week or so. This is the Chinese alternative to all the AI models that are out there, Chat GPT, your
Built for $6 million.
What's that?
Built for $6 million, if you could believe
Supposedly. I mean, yeah.
Wink, wink.
Right? Anyway, that was the big news this week, right? We needed a reason that Microsoft and Nvidia were going down, and the reason we pointed to was the debut of this DeepSeek thing, which you just said is a low cost or supposedly low cost alternative AI platform out of China. So what happened? Nvidia crashed. I mean, for lack of a better word, it was $150 to close out the year. And by the way, Digital Dispatch editors here at Digest Publishing cashed out at $150 a share. It's now $120 a share. Nvidia was down, I think 5% one day and then 6% in aftermarket. Granted, they had earnings. It is the kickoff of earnings season here, but easy to blame a new AI model. And then where I'm getting to with uranium is the uranium names were hit, and more specifically, the nuclear names were hit. So the ones that had been flying high, the Oklos, the New Scales of the world, these small modular reactor companies, they were down 10-15% here in the end of January when that DeepSeek thing came out, because everybody needs a reason, right? And you got to click the button. And the reason was, well, AI is not going to require as much power, so we're going to sell down the uranium names. And all that is narrative, I guess, is the point I want to make. Like, even if AI is going to drive uranium demand, it's not going to be for 10 years. And I've said that on this podcast. I mean, sure, I'll take the bullish catalyst and I'll take the bullish sentiment, but if in a real way, if data centers need power now, today, tomorrow, 2026, 2028, it's going to be from natural gas. I mean, you can't build a nuclear reactor in 2 or 3 years. Just go and ask Southern Company in Georgia, right? How long it took them to build their last 2 reactors there. At the same time, uranium stocks snap back really quickly. Like that DeepSeek was just a short-term thing. I've already looked, in the subsequent days, and they're starting to tick back up. So, and the other thing that happened is, sorry, I'm going to be a long uranium answer.
No, it's good.
A couple of weeks ago, we were talking about Inkai, and we were talking about how the Cameco JV with Kazatomprom was offline and there was tensions there. Well, that came back online this week and they put out a press release. So I didn't really see anybody talking about it. And yet uranium stocks went back up. So all that to say, these short-term things that you see, headlines, Inkai, DeepSeek, etc., they're good for 36, 48 hours of movement in the world that we live in. But the fundamentals that are driving this whole thing, the billion people that don't have electricity still, the need to generate clean electricity, which even after 20 years, they can't figure out with wind and solar, they're going to have to turn to nuclear and uranium. The extension of plant lives here in the US, all those things are very real. And so all that to say, I'm content to be bullish on uranium and glad that I bought in the recent weeks, even with this DeepSeek announcement. So the price is what the price is, $72 a pound today on the spot, whatever it is, right? But you're going to see a bullish 2025 for uranium equities. I'm pretty convinced.
Yeah, I couldn't agree more, and that's going to lead into a lithium rant. Sorry, it's getting long, folks, and then we'll get to the premium part of the podcast, right? The picks for you all. I feel exactly the same way about lithium, and I was sitting there earlier thinking about my lithium positions and my lithium exposure, and it's robust. And look, the past. I spent 3 years ago is when I really ramped up my lithium exposure. And then, obviously with the Patriots and the Q2s, like we've done very, very well, despite the pullbacks, still robust positions there with our group, and we'll continue to do well. And that got me to thinking, right? Because I've said before that the last 2 years after my lithium position, I've spent the last 2 years getting heavy into copper and gold, and that's starting to work out. And several of the companies that we positioned aggressively in will now be drilling as early as 3 weeks from now in the case of one company, and 2 months from now in the case of another company. And so the torque for the positioning that happened 2 years ago is really just starting now, despite being up 300-400% in one position, and
Trump,
be
Trump,
two
baby, drill.
Trump and some 200% in the other, and the fun hasn't even started yet. Those positions are going to do well. I'm very confident in those two positions. But I'm sitting here thinking, I'm going, the lithium explorers right now are really providing an opportunity, man. And here's the short version of my thesis. Let's say I'm wrong about lithium and it doesn't bottom this year, or it hasn't bottomed. It's a fake bottom. And we get another year of China doing what China just did with the DeepSeek thing, where they tell you they spent $6 million and they're only using X amount of chips, and everybody knows that's bullshit, right? Same thing with the lithium spot price. It's manipulated, the supply, it's manipulated. Put all that to the side. Let's say I'm wrong for another year. Why would I not spend that year, and I'm going to, accumulating aggressive lithium positions with the sell-off that we've had over the past year and a half, in anticipation of what even the bears say will be a lithium deficit at the longest in 2 years. That's the bearish take. The bearish take, folks, is Gerardo's wrong. It's not bottoming this year. It's going to continue to drop this year, and you're going to have another year and a half or two. But then even the bears will tell you, yes, we need so many more mines. You're absolutely going to have a deficit, and you're going to have a very, very robust price rebound. Why wouldn't, and again, I'm just sharing what I'm going to do, why wouldn't I spend a couple of years taking advantage of this consolidation the way we did with uranium back in the day, the way we did with lithium the first time around, the way we did with copper and gold a couple of years ago, and just positioning in the better names, the ones I know are going to become mines, right? And so that's my last little take. For those of you that are contrarians that have long-term capital to speculate on, nibble away. Do it slowly, but nibble away. Put some junk bids in there. Something's trading at $3, put a 250 bid in there. Put a 225 bid in there, right? And just good until filled. Let it sit there. One day it might get hit, and you'll have a great entry point. Or if you have lithium positions and you're down on them, I would average down, because those companies, those explorers that aren't going to be producing for another 4 or 5 years, are going to be producing into the sweet spot of the profit cycle. Much like the companies that were building gold mines 2, 3, 4 years ago are now producing and spitting out cash flow during the sweet spot of the profit cycle, record high gold prices. So I see a similar thesis playing out in the lithium space. There's a lot of great names. Those of you that watch this know my biggest exposure to specific companies. But we got a third now that I'm going to share here in a couple of weeks when it's time, maybe a month from now when it's time, that I'm really, really excited about. That's tiny. And so I'll leave that there. Anything that you want to add before we get into the premium part of this podcast, which is why people pay?
Just what Rick Rule says about contrarianism and being a victim. And I've used that line recently at these conferences when doing, stock pick talks and panels. I've been given a lithium pick and it's been Q2. So, that'll be your freebie here. But yeah, $10,000 a ton is much different than $80,000 a ton. And the same way Trump has given lip service to the oil and gas stocks, he's given anti-lip service to the EV sector, right? As part of those declarations, the national energy emergency, the shit we were talking about earlier, he's taken away the incentives for the EVs here in the US, and he's pulled us out of the Paris Climate Treaty. You have to imagine, at least optically, that's bearish for lithium and electric batteries, which, to your point, with a long enough runway, gives you opportunity to get in. And I'm writing a check into that company that you're mentioning the same way that you're writing a check. So I do believe lithium is going to be around. And I think it's probably more a U.S. phenomenon, right? I think U.S. has been slower to adopt. I see Scandinavian countries that are at 90-95% adoptions for electricity. They work in the cold, obviously, in Scandinavia.
Imagine that.
The technology is not the issue, but they just can't sell them here. And just anecdotally, and I know we're running long, is, bought my wife a car not too long ago. Well, the dealership's hitting me up about these Hummers they got, right? These electric Hummers. And it's $110,000, $115,000 car. and they can't move them because now they're leasing them for like 600, and I think he told me, what did he say? You can get a $650 a month lease. That's lower than most people's car payments, right? I've
Yeah.
seen 800, 900,
Yeah,
$1,000
yeah.
car payments. They're giving this Hummer away for less than $700 a month with 5,000 down on a lease. So I just know that they can't move them, right?
Yeah, no, and again, I'll go back to my ranting and raving about lithium. I think there's going to be a premium here in North America, here in the coming several years. Curious to see what the Elon effect is, being that the Cybertruck could be in one of its best sellers, and the Model Y now coming. If those EV incentives go away, while China is going in the other direction and adding incentives and incentivizing even more, with rebates and all sorts of the financial manipulation, call it what you will. I can't see the U.S. wanting to lose more market share in that space. So what Mr. Trump says and what Mr. Trump does might look like different things here in the next several months. We will indeed see.
Sure. Cut the EV incentives for his base. When it actually comes time for the policy, Elon's going to say, "Come on, sir, I helped you get elected. We're not cutting these tariffs." Sure,
Yeah, and most of those jobs are in red states, right?
yeah.
Yeah, so let's be clear about that. Listen, folks, for those of you that are watching the free version of it, this was the 302nd episode of our weekly therapy session. I needed this one, called Investing in Bizarro World. Folks, have a phenomenal, phenomenal end to your month and a beautiful start to your February. Nick, parting words of wisdom, sir.
Don't forget your Valentine's card and flowers. I try to remind you every year. See ya.